Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, October 28th, 2020. What I'm going to do in this video is start out with a very brief update on the broad market. I posted quite a bit today. Nothing has changed since my earlier post regarding what the market's done nor my outlook. So I'll do a quick update there, and then I want to go over the some of the recent chart requests from gold members in the trading room. It's not very long, and I'll even tell you ahead of time which stocks I'm going to cover in what order. BBY, CHGG, CLNY, Amazon, which is AMZN, as well as XLY. There was a question put there regarding those two because they're related. SHOP, BIGC, ARKK, ARKF, ARKQ, and IBM. So about about a dozen or so stocks. Let's start out with the markets, and again, nothing really changed since this morning. These are 60-minute candles. This is today's price action. We gapped down. There's a gap right there from yesterday. Big old gap. We went down. We hit my 273.82 support, and we've been dancing on it all day. We're at 273.41 right now. On a nearly 300-point security. That is on the button almost, that again, 20, 30 cents, even a dollar or two is statistically insignificant. It's a very small percentage, fraction of percent. So we've been trading on that level all day. That is a reaction. A reaction I define as a consolidation and or a bounce off a level. And I'm still expecting a rally. Now the buyers haven't stepped in. It says a little bit. Shows you that we've seen a little bit of a shift in the supply-demand dynamics, and that's also a function. We've had quite a few charts break down today. I'm going to get to that in a second with some of these, and therefore, in other words, like with IBM, again, it was or BBY. I'm sorry, requested by a member the other day. I shared that one yesterday in yesterday's video. Clearly bearish setup. It broke down today. There's a sell signal, and that's not the only one. I have quite a few stocks triggering sell signals. I think I covered Qualcomm this morning. More semis breaking down. What does that mean? Well, if you start breaking down on the longer term charts, it's going to bring in more selling. So consider the bounce that I'm looking for picking up nickels in front of a steamroller. Now, if you're an active trader, it doesn't take many nickels. If you're active trading, especially day trading, you can leverage up quite a bit. You don't have overnight risk. So if we get that 1.5% or so bounce I'm looking at, great. If you, like I said, if you trade NQ or ES, I don't have to tell you what a 1.5% bounce puts in your pocket. It's well over $1,000 per contract. So even if you're trading QQQ, or you can leverage up with S or TQQQ or SQQQ, same story. You can it's worth your time. Again, if that's your trading style. So let's not talk much more on it. We're on that level right now, and we only have hour and 20 minutes left to go in the trading session. So I figure if we're going to get a bounce, well, it's either going to come late in the trading session today, excuse me, possibly into the close, and or over in the overnight futures session, and possibly until tomorrow, depending again what the futures do overnight. If they kind of flatten out, but if they ramp up, we could gap up. And I already shared my bounce target right here, the just shy of today's gap right there. And for futures traders, this is what NQ looks like, kind of clinging to the divergence. If we turn up here, this PPO line moves fast. That's that 9 EMA right there. We're close enough. I mean, you want to say the divergence has ever so slightly been burned through, you can say that. But again, we're going to have to turn up soon now to keep those divergences intact or close to intact. Also keep in mind that we're extremely oversold. I have an extreme oversold level on my RSI for the 60-minute chart NQ at about 26.82, and usually tags close to or at that level have in the past resulted in rallies. So do you short here? I say no if you're an active trader, because we're at support. So I just showed you we tagged the bottom of that support zone I covered earlier, 112 or 11,228 down to about 11,166. That was the low today, so we hit the bottom of that support zone. And again, if we smash through it and you get impulsive selling, then that's it. And we had a consolidation. That's pretty ugly, but I still favor this. There's your bounce target, which aligns roughly with that QQQ gap, a little shy. I'd book profits a little shy of that 11,350 level if you're an active trader just looking for a quick bounce. And if you're a swing trader or you're an active trader and you think we're going to get more out of it, and you could certainly if we get up there, maybe at the very least, raise your stops to protect some profits at that point and let it run. You'll probably get a reaction if we hit 11,350 or close to it. And we could easily carry back up to the top of the price channel, and very bullish if we break above the price channel. So there's a potential bull scenario, but again, right now I'm looking very near-term, nearsighted. And let me go over the charts that I said I would and jump over to those real quick. Okay, first one up, BBY. Again, covered yesterday, is a setup now, a clear sell signal. What you see on BBY, this is Best Buy. There's your trend line right there. There's your divergence line, gives you a divergent high, rising wedge type pattern right here. Clear negative divergence, and I believe I would have said that we had to take out the trend line in that 114.21 level, which we did. Now we clearly took that out, and as well as Monday's low. Okay, I forgot where it was. Took a quick phone call. All right. Either way, there it is. That's a solid breakdown. We have less than hour and 15 minutes to go. Very unlikely, we're going to rally back up, 4% to close back on or above the trend line. So that's a sell signal. Now, keep in mind, okay, you broke the trend line. That's a sell signal. I mentioned earlier, or to this, member in the trading room or someone else today, that my preference, because I'm looking for a possible or likely bounce in the Qs here. I think you can get a better entry on BBY if that rally, if it comes tonight in the futures and we hit that bounce target and then we reverse down tomorrow and we open where we are today or down lower, then that's it. That's the thing. That's why I like trading futures, because a lot of times my bounce targets, upside or downside targets are hit after the regular session. If you trade QQQ or even those leverage ETFs, yeah, there's some trading to be done in the pre-market and after-hour session. But the problem is orders. You're not a robot. You're not going to, get up at whatever it is, 6 a.m. to 8 p.m. Be in front of the computer. With futures, you can set stop limit orders, buy stop orders, all kinds of orders that will be hit around the clock, and that's not the case. QQQ and the ETFs, if you want to use, stop loss orders, those need to be during regular trading sessions. So what I'm getting at is as far as BBY goes, first of all, if we even get my bounce, again, if it happens to play out into tomorrow, then that should give us a better entry on BBY and some of these other stocks that just broke down today. Otherwise, we don't get a bounce, or we do, we bounce, hit targets, and then QQQ reverses, and NQ, I should say, the futures break today's lows with conviction. We're going to head lower, and then you'd see more downsides. You may not get an entry on BBY. So up to you how to trade it. Some of you might have already taken that when it was pointed out. Some of you might have taken it today. There was plenty of opportunity. You can see today's candle was all the way back up to that 141.21 level. And I also wanted to point out that we hit and we're trading right on the 50-day exponential moving average. This is the yellow line right here, and you can see that yellow line contain the pullback right there. And you go back in time, there's other levels where the 50-day moving average acts as support or resistance. I don't know if you can make it out here in the video, but that's it right there, coming in there and there. Resistance when you're below it, and then support when you're above it. So a little more work to be done on BBY. And again, do you short right here based on where we're at today? No, my preference, wait for a kickback rally all the way up to maybe close to the 114.21 level, a little below it. Maybe even a back test of the trend line if we get a decent bounce. Or you can wait till the 50-day is taken out. And, these are all the targets already shared, all the way with a preferred target about 95.51, preferred swing target. And that just means, still expect reactions along the way at each target. But that would be, again, if and when we get there, I'll make a decision if that's going to be my preferred final target. If I end up taking a position, even if I don't, I'll continue to cover it because I do like the trade. And again, at least one subscriber's interested in that one, probably has a position. CHGG Chegg. Somebody asked about that. Here's my chart. I believe I posted that along with BBY in the trading room already. Divergent high 1, divergent high 2. Divergent high 1 played out for a nice correction. Hit this 62.61 support level. You can see the reactions there and there. Bounced, pushed up, made a marginal new high, still a divergent high. And then, as I mentioned the other day, in the trading room. The sell signal came on a breakdown below that trend line. Right there was a big gap, big red candle, follow through red stick today. And again, minimum target remains, these are the targets. Unadjusted actual support levels, but cover a little bit above whichever one you're targeting. 76, 70, 72, 76. Probably get a reaction there if and when hit. 62, 61, and the fact we already hit it and put in an even larger divergent high sets the stage for an even larger correction. So I think we can come on down here to at least that 55, 54, 54-ish level. It's a big old gap right there, and if they can't defend that gap successfully, then you are looking at the odds of a gap backfill being pretty good. And that'd take you all the way down to about 44.50 or so. So that would be a longer term swing target. And from where we're at today, if hit, and again, that's going to depend on the market. If the stock market shrugs this off, rallies before or after the election, or over the next few months, because this target wouldn't be today, tomorrow, or next week. It's a longer term swing target. That's a 41% drop. As of now, you can see, let's just stick with a preferred swing target there, that 54.54, that's about a 28% drop. Again, negative divergence, everything else that says, this and many stocks have probably completed their run, just like you had negative divergence here. There it is. And that was good for a drop of, to that point, about 41%. So when I call for these drops of 40, 30, 40, 50%, that's typical. That's typical with these big divergences priced in. And again, just my opinion, whether it hits it or not. Sharing what I see. CLNY. This one doesn't look so bad. There is, I mentioned it's in a nice uptrend. Again, if you just strip away every line level on the chart, you can see the stock bottomed here when everything else bottomed back in March, and has gradually, it's been in an uptrend. It just recently took out that previous high there, so it's keeping this uptrend intact. Now, there are these divergences to note, and they're there, almost divergence, almost flat line. We made a slightly higher high on the RSI, so I'm not going to put divergence there. If this one can hold up above that 331 level, that'd be great. And if it pulls back, $3 is a pretty important support level. Anything much below that is not so good. So it's also taken out. I don't know if you can make it out here. I have a confluence of moving averages. I have a 200-day exponential in red. 20. Hold on. Let me see something here. That should be. Oh, never mind. That's correct. What I'm focused on is this one here. There's a simple 200-day simple moving average, 200-day exponential moving average. That's the blue and red lines here. And then I also the 50-day. But you can see the 200 simple and exponential I really like for long-term trends. And you can see they're both here. When the stock was in a downtrend, they were capping that downtrend. And all along, we've been in a bear market for a while on CNLY. And you can see just recently, right about here, they were both taken out. That's bullish. The 200-day simple and exponential, and the stock is trading above those now. So, is it one I would buy? No, I don't, maybe I'd do a little due diligence on it. I don't know the first thing about them. But again, if you're, believer in this stock, and it doesn't do any technical damage, the uptrend remains intact, I think this is a logical price target up here, about $4.45. Excuse me. Bit of a tongue twister there. Lots of reactions along that level, and that would be certainly a place to book profits, at least near term, because I think you'd get a significant reaction if and when the stock gets there. Okay, so I had a question put to me in the trading room about Amazon and XLY. XLY is the consumer discretionary ETF. Amazon makes up about a quarter of the returns. It's such a big stock with such a large weighting. About 1/4 of the returns come solely from that one stock. And I pointed out the other day, or several times since, on the 60-minute time frame, potential bullish development here. Let me get it to it. And that was this bullish falling wedge. So the question that I had was, I also, in a recent video covering the sectors in the S&P 500, made the bearish case, told you the charts on XLY were bearish. And so someone asked, well, Randy, how can XLY go down if Amazon goes up and it's bullish? Well, first of all, keep in mind, this is only a 60-minute chart, so it's more the very near-term outlook for Amazon. And as long as Amazon remains above this uptrend line, which it's flirting with now, there was that breakout recently I highlighted right here of the bullish falling wedge, and we've been, walking higher since. And so that's near-term stuff. And if it continues to play out, yes, it's going to provide a tailwind for XLY, meaning it should help out XLY out. However, when you go to the daily chart, Amazon's looking toppy. This is the bigger picture. So, that's why I use these different time frames. An intraday chart will give you more of a near-term outlook. The daily chart will give you the bigger picture. And what I see here, I know there's a lot of lines on my Amazon chart, but most importantly, from here to here, we had divergence on both, clear negative divergence on both the RSI and PPO. We had a nice clean trend line there. Amazon broke it, and Amazon has been moving lower since. We failed to come back and take out or even reach that previous high, and we also back tested this trend line. And so I can make a bearish case that this was the first wave down with a counter trend rally and more to come in Amazon, but can't put the nail in the coffin yet on that stock. When I look at the weekly chart, we don't have divergence on we have it on the RSI, but we could get another thrust up, make a new high in Amazon, then put divergence. So this would kind of mesh with a post-election rally that could take the market up into year-end, maybe early 2021. And then there's a lot of stocks like this I'm watching that could put in, if they make marginal new highs, then set the stage for an even bigger drop. Negative divergence is not a must. It is not an absolute must for a correction, but many of the big tops, when you go back in the past, 36% drop, 14% drop, 32% drop. Some of the biggest corrections, or you can call them bear markets if you want. I call, even though it's over 20%, which is technically the definition of bear market, a drop of 20% or more. I consider these 30-something% drops just corrections in an ongoing bull market. So, and Amazon has some trend lines it hasn't visited in a long time, so that's where it probably come down to. So to answer your question, yeah, there's that daily chart. Case can be made, and again, although 24% weighting is a big weighting, remember there's still 75-76% of all the other stocks in that sector, and if they all start to fall, Amazon is an earnings juggernaut. You got to give it credit. So when you look at the other companies in there, and I'd have to dig through each and every one, if enough of those fall, then they're going to take XLY down with it no matter what Amazon does. So you have to also look at it that way. Somebody asked about Shop, S-H-O-P, that's Shopify. They do websites for companies and turnkey kind of stuff. You want to build your own. You want your, all the solutions, the merchant, the, credit card processing, all that stuff. And that's boded well for the stock since the March lows. A lot of people turning to home, starting home businesses, doing websites, and everything. E-commerce has been increasing. However, all right, that's fundamental stuff. Technically, we put in a divergent high right here. This is a daily chart, and we had a correction. First wave down, we had a sell signal there from the highs on that negative divergence or the divergent high. The stock fell about 26%, pushed back up, and a lot like many, like Amazon, has not taken out that previous high. Has so far fallen a little, reversed a little shy of there. I don't have a strong opinion on this one. PPO's above the zero line. It's certainly in an uptrend. Like I said, we had negative divergence. The $1 million question: is that enough for those divergences to play out? That correction there, it could be, or maybe not. I look at the weekly chart, and I have even less of an opinion on the stock. It's certainly in an uptrend. So this, in other words, this one may go down, and probably would. It's a component of the Nasdaq 100, and would almost certainly fall if we get a decent correction in the market. But not one of my favorites. I think there's better fish to fry on the short side than this one. Just not really my kind of setup. BIGC. Big Commerce Holdings. This is a daily chart. And when a stock, this one looks like it's came public, started trading as a public stock on August 5th. I can't do anything with this chart other than, look, there's a trend line. In hindsight, it was broken. Here's another downtrend line. Be bullish if this gets taken out. So what I do when there's not a lot of charting history to look at on a daily chart, I zoom down to a 60-minute chart. And so there's the same trend lines there. That one was broken. There's your downtrend line. This is a support level I have right here, about 79.87, and we're at that support now. So a little bit of divergence starting to form, at least here on the RSI. So if this one can pop that downtrend line, line. It should run. So if you are bullish on the stock, that would be your buy signal. I'm gonna have to. I'd have to study further. Okay, that would be a first target. Yeah, I can certainly see some levels there. About 89, a little shy of 89, be a minimum target, and then there's some other targets here. If we go the other way, if we break that support, then I don't see support on the stock until that previous reaction low right here. So we are in a downtrend, keep that in mind. And so we need to pop. It would help to hold this 79.87 support and also pop above the downtrend line. It'd be a pretty good move, up to that 87 target. That's about 11.5%. If it got up to that 97-ish level, that's about 21%. Okay, had a gold member ask me about 3 ETFs. Are all from this, I guess, the same company. They're similar but in different industries. This is ARK, or ARKK is a symbol, ARK Innovation ETF. What I see on this one is a pretty well-defined trend line, which we're testing right now. I see negative divergence. You can see the divergence line right there with negative divergence form. In fact, we've had divergence building since this point here, so it's actually a little bit larger than I drew out before. So there's your divergence. That tells me a impending trend change is likely. I studied this one a little further since the quick glance I gave it when I replied to that member in the trading room. So that's it. I don't have any hard targets. I can give you a rough target. The subscriber asked me for my long-term outlook. Look, the stock's in an uptrend. And when I look at the weekly chart, it's certainly in a bullish trend, but I don't have an opinion long term on this, as to where it goes from here. I also can't get price targets when anything's at an all-time high. There's no overhead resistance levels. So if you're a believer in the type of stocks they're holding and all that, I can just tell you from the technicals that I would not be buying this stock now, and if anything, I'd be getting ready to short it. On this weekly chart, there's that negative divergence right there, shows through pretty clear. We had last time we had divergent high on the weekly was right here. There was a correction, and more so to hone down on your entry or exits. If you're long, a solid break below this uptrend line, that's going to be bearish. There's also that 50-day exponential moving average below, often acts as support on a lot of stocks. So if you take out the trend line or today's lows, the 50 days right below it, that's going to open the door for some selling and probably take you down here to that 85.18 target, if you will. The other ones were ARKF. That's the ARK FinTech Innovation ETF. And same story, different basket of stocks. You're going to have, your fintech companies in there, but there it is. There's the uptrend line right there. Here's your primary uptrend line. And what happened is we broke it and then back tested it for a while. And finally, after enough back testing, boom, gave up the ghost, had a nice correction, hit the 36.54 level, which has since become support, had another thrust up, made a marginal new high, which was a divergent high. We didn't have negative divergence here. We do have it now, and we did just break trend, the uptrend line, and we are cracking now below that 42.22 support. Not impulsively, but any more downside, really another leg down below today's lows. You do have the 50-day moving average a little below, but I think that opens the door again for another move down to that 36.54 and quite likely all the way down here to 33.46. Weekly chart, this one hasn't been around a long time, started trading in 2019, but you can see divergence already building on the weekly. And then finally, there was one more in that fun ETF family, ARKQ, which is the ARK Industrial Innovation ETF. Same thing, and that's, it's not mere coincidence. A lot of these stocks that are in these 3 ETFs are components of the S&P 500 or Nasdaq 100. I'm looking at this one. If my list is correct, you can't see it's to the right of the screen. It's showing me that it owns Apple, Amazon, Alphabet, Tesla, NVIDIA, TSM, JD, CAT, ISRG, DE, which is John Deere. That would make sense. I'm just looking at some of the names in there. Again, if that's a correct list, this charting program, when you load an ETF, will show you the holdings. If you want to verify it, you need to go to the company's website. I don't always rely on what this charting platform is saying. But if those are the names, like I said, I just rattled off the FANGs, the top, most of the companies in the Nasdaq 100. From a charting perspective, negative divergence right there. uptrend line, which was broken. We had a little minor support here, which was broken today, giving us a sell signal, and that opens a door for a move down to 54.77, and then quite likely 52.22. If things get real ugly in the coming weeks to months, 43.65. I can't make a case to go long now. If you're interested in this one, bump me down the road. Don't bump me until we get down here. Anytime soon, my outlook's not going to change. Even if we pushed up, made a marginal new high, we're just going to extend these divergences because they're very well intact right now. So, I wouldn't become bullish if we made a marginal new high because we're still going to have overbought conditions probably at the time and negative divergences. So this is where, we might be able to get into this stock, cover a short, or go long if that's what you're interested. Or down here, again, depends what happens. Right now, just near term, intermediate term, this one looks bearish to me. And finally, somebody asked about IBM. IBM is just, this is big blue. This is the old Google, or the old Microsoft. This was once, one of the darlings, the tech industry, or the darling. And it's just like many stocks, nothing lasts forever. Nobody stays at the top forever. IBM is a stock that topped back in 2013, and it's been in a cyclical or even a secular bear market since. There's the top in 2013 right here. I'm going to measure it. I just need to put the horizontal line there and pull down. So since 2013, this stock has lost 58% of its value to that recent low. As of today, it's down 51%. And you can see here's your bear market downtrend line. So, anytime soon, any rally I look for, even with this big divergent low it put in back at the March lows, just a bear market rally. And that's it. And this is again, very clear downtrend. Downtrend is a security making a series of lower lows and lower highs. So it only stands to reason this one's probably going to go on and ultimately take out that low. I can't make a case to buy it. And even, look, by the way, I love bear market rallies. I love trading bear market rallies long, stocks long, because the move is very powerful. You get short squeezes going on, shorts are covering, long step in thinking the worst is over. But when I look at the daily chart, IBM, other than the snapback from the COVID lows in March, we've been bouncing around in this trading range here, and we just recently broke down below it. And I don't see much, if any, support really on the stock other than the March lows back there. We did have a reaction low right there, so maybe they step in and buy here. But again, I don't see anything in the chart. It is oversold, but remember, oversold in a bear market tends to become oversold quite often and/or get extremely oversold. So I don't buy stocks, especially in a bear trend, simply based on oversold. If you're in a bull trend, oversold is usually uncommon, and it's usually fleeting. It's usually a one and done tap. But again, not in a bear trend. Just like overbought in a bear trend is one and done. So when you're in a bearish trend, you get an overbought reading. That's usually a good time to short or get out of your long, and the downtrend resumes. And that's it. That's the recent chart requests from members in the trading room. Here's QQQ again, just flatlining. Like a flop. It was like dropping a bag of wet laundry down, hit the ground there. That's a reaction. We fell, hit that 273.82-ish level. We're at 273.80 as I talk, just ticked down, and that's it. So did the buyers step in the last hour? I think so. No guarantees. If not, then watch for the futures, to pop overnight. And again, I gave you those targets on NQ already. And we'll just have to pick it up tomorrow and see what happens to the futures. Remember, it can go the other way, but I've already shared my thoughts again, whether it happens or not. So if you are going long for the bounce, don't fall in love. If you go long QQQ, remember, you are going to have quite likely an opening gap to deal with, and that opening gap can either, if you're long, it can bypass your any well-placed stop and can go either way. All right, let's wrap it up here, and that'll probably, this will be the last update for today unless something big happens into the close. We'll pick it up here tomorrow morning. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.